Good afternoon. This is Lance Bryce with Thrive Mortgage. Today is Thursday, May 20th. Hope you're doing well. This is your market update for the week. We're seeing interest rates continue to trend a bit higher. We're sitting about where we were this time 30 days ago. We had a nice little 3 or 4 week reprieve in rates, but we are now seeing them trend a bit higher as we've all been expecting. The national average, according to Freddie Mac, ticked over 3% today. Not unexpected, y'all. Not when we are engaging in the policies that we are. The more we tax and the more we spend, the more upward pressure we're going to put on interest rates, just due to the amount of bonds that will need to be issued to pay for all of this new spending. So that's the perfect recipe for a rising rate environment, and that's the reason we are still encouraging folks to lock as soon as they have a contract on a property. That said, lots to talk about with regard to where rates are headed in the very near term and the short term. We've seen the near collapse of cryptocurrencies, with Bitcoin leading the way down. And there is some speculation about where those dollars are going to go. Are they going to go into the stock market where the more speculative money lives? That would seem to be the case today. You're seeing the Dow up over 250 points, although it's down nearly 250 points over the last week, as we've seen some pressure in the stock market. Part of what we are seeing adding turmoil as well is the Federal Reserve minutes came out yesterday showing some conversation about when they're going to start talking about what a taper would look like with regard to the purchase of bonds. Of course, we know that the Fed is propping up bond prices by being the primary investor for bonds and mortgage-backed securities. At some point, they're going to have to stop buying all of those assets, and when they do that, we're going to see a lowering of demand, and we're going to see an increase in yields as prices decrease to accommodate that change. So we're all waiting for when that's going to occur. So anytime the Fed makes even the slightest squeak about starting a tapering campaign, we see the markets react, and we saw that yesterday with interest rates. That said, the non-farm payroll report that was so weak this last Friday came out after that Fed meeting. So any talk of taper is probably going to be tempered with employment numbers. And if those maintain the same kind of weakness that we saw at this last report, be hard pressed to see where the Fed's going to start tapering anytime soon. In any event, lock when you've got a house under contract. That's the best advice. Rates are still outstanding. Even though we're hovering around 3 as an industry, my goodness, anything in this range is just phenomenal from a historical perspective. Anyway, I hope this information is helpful for you and your clients. Call me for specifics. I'm happy to look at any scenarios you have. You can find me online at brycehomeloans.com. And that's the best way to reach me. I'll have a great week. We will talk to you soon.